Patience is key in trading. Oh, patience is so key in trading. Patience is beyond key in trading. Listen. Before that, patience is beyond key in trading. I literally filmed a 45-minute video before this, and I was told there was no sound. So I'm on here doing this once again for you guys, for free.
À la prod.
Hey, yo, man, listen, man, welcome to another video presented by JM Trading, powered by YouTube Live. I am your host, JM. Listen, like I said, man, 45 minutes. I went live. Man. I went live and I found out from one of my team members immediately, yo, bro, there's no volume. You know how stupid I am. I did an entire thing. So now we're back at it. Okay? Let's get rid of this welcome sign. You guys are already here. Welcome, man. I appreciate you guys. Let me at least make sure my YouTube studio is running, for God's sake. Okay. Right? Hey, man. I really wanted to knock down this trade psychology, man. Oh, man, you don't have no idea how pissed I am that I did that 45 minutes and now I'll have to do it again. But it's okay. It's okay. Hey, listen. Trade psychology. Look, I was in these two trades today. Check it out. All right, I was in this one trade today. But here's the daily chart. Here's the 4-hour. Yo. This is the move I had, yo. This is the move I had, right? Take a good look at that. Pause it. Do whatever you gotta do, right? Alright, I'm gonna take that off. Check it out, bro. Check it out, man. Look at this. So I was targeting this zone right here because I knew on the daily chart that it was a big level of... There was a big gap. There was a big ass gap on the daily chart, man. Very big gap on the daily chart. Look at this. And keeping it simple, price was over here, and I knew they wanted to fill in that gap just from the experience that I have as a trader. I knew they wanted to come and fill that gap, and there was also a mitigation block for my advanced traders out there. And I like to keep it simple. I don't have any crazy indicators. I'll use the RSI and the 200 EMA, which I call neutrality. I'll use it to give me a little bit of confirmation, but I'll typically just take that stuff off. I trade naked. And so I was targeting this zone right here, and I'm gonna keep it brief, man. I kind of got scared, right? And I got stopped out, or not stopped out, but I took off my entire position right here. This is the Asian range from the day before, from yesterday. And as soon as price broke out of that, I literally just, I don't know. I got scared and I just sold it. And I wake up the next morning, guys, and this thing was 90 pips away. And not only did it hit my TP, it hit the order block, the mitigation block, perfectly and never came back as well. This is, of course, not for the beginner. This is for advanced people, but even the beginner can pick up on this, right? You got to understand there was a gap on the daily, man. There was a gap on the daily chart. Price was right here. I just wanted it to come up and fill it. So why am I calling this video Patience is Key? Because, my friend, patience is key. I messed up, right? I really did mess up. And let me make sure I pop this out. Right, got the live chat. Right, okay, so yeah, patience is key. I already know that I'm an intraday trader and I like to hold on average 6 to 8 hours. But I don't know, I got in at 2 and it ran up at 3. It passed the high of Asian range and I just thought it was gonna flush back down. I don't know why, I thought it was a fake out. And then right here, I was selling some more. And well, funny enough, I grabbed 25 pips, right? All I had to do was walk away. You know, if you know my stuff and you've traded with me before, you know I say just grab 25 pips and leave. You know, make your TP 100 plus pips, but take 25 pips and leave if it looks like that's it. So to me, in my head, it looked like that was it, right? So I take some money off the table and then I start seeing this curl down. And I'm like, oh yeah, let me sell this. So I'm selling it, and I'm putting a lot of size up. Boom, just blows right through me. Blows right through me. I gave back all my profits and ended up losing like 40 pips worth of price action. So I made 25, lost 40, and ended up with a 15 pip net profit. A 15 pip negative net profit. Sucks, I know, right? But let's talk about this. Why do we get psyched out of the market? And what can we do about it? Stay tuned. Check it out. Look at this. If we turn on my RSI, and we even turn on the 200 neutrality, turn that off actually, you can see it was a perfect blowdown move. They literally grab the low of Asian range where there's a bunch of stop losses. They do a 1, 2, 3, working the low. They're literally working the low. They're working the low, and we get a bullish divergence pattern on the RSI. And typically around 2:15 a.m. Eastern is where I see the end of the manipulation. This is a perfect accumulation, manipulation, and markup, right? It's perfect. So why did I get scared? Well, I don't know. I felt like, yes, this was a 1, 2, 3 pattern. And I also got stopped out right here because I went long here, got stopped out. And then I just chased it, right? So I got in at 11, got out at 9, or my stop loss would be 99, 38.99, 39.11 would be my entry, and then my TP was 39.31. Keep it simple. I got a 10-to-1 ratio here, right? 10-to-1 ratio. And funny enough, right, 10-to-1 ratio. Funny enough, I mean, I left so much on the table, it almost pissed me off. So they do a 1, 2, 3 peak formation. They hit the low. They form the low of the day, and then they run away 120 pips in the other direction, which was a slap in the face, right? So going back to this, guys, I mean, I already had it out there. I already had the orders out there. That's how you know I'm not capping. So take a good look at that. I was targeting right under that range. I was targeting the daily imbalance mitigation block, because I knew as soon as price hit that mitigation block, it was gonna, create some resistance and kind of run down. And that's exactly what happened. So I could have even had an order up there. I didn't do it. So what can we do about trade management? Because what's more important than risk management? Two things: trade management and psychology. That's at the top. But now that we've covered the psychology, so to speak, well, we haven't. That's the entire video. But this entire thing is psychology. But what is trade management? Well, let's walk through this. If I got in at 39.11 and price goes a third of the way through, I like to move my stop 2 pips in profit. I only move my stop twice. 2 pips in profit, and then a third of the way of where it gets to when it's 2/3 of the way there. Right? So what the hell does that mean? Right? What the hell does that mean? What the heck does that mean? It means this. If I got in at 39.11 and price moves, if I'm targeting 120 pips, a third of that is 40. So once price gets to 51, which is right here, I'm going to trail my stop 2 pips in profit. Then once it gets another 40, which will be 80, which will be 38.91 right here. I will then trail my stop a third of 80 or 81. 81 would, 3 goes into 81. 81 divided by 3 is 27, so I'll round it to 30, right? So as price gets to 39.91, I'll trail my stop to 38.41 right here. Notice price never came back. It just shot up. Now the psychology here goes like a little bit like this. For God's sake, if you're already up this much, one would say, why not take partials? Oh my God. Don't even get me started on partials. But that's another conversation. Why take partials? Why? What's the point? Well, here's the thing. You're already up such a big amount. You might as well take partials, right? Wrong. You set a take profit, so let it get there. Taking partials is almost like you saying, I'm a little bitch. I'm scared. I don't believe in myself. I don't think this trade is going to keep running. That's crazy. Why would you not think the trade is going to keep running? You're the one who set the boundary, right? Now, it's easier said than done because, again, I'm a hypocrite because I sold off way down here. But I took off the whole position, right? I'm not going to get a bunch of people together on a road trip to Florida and then be dropping people off in North Carolina, Virginia, Georgia. Nah, everybody's coming to Florida with me. So I'm taking the entire trade up. If I put a 0.10 there or a standard lot, I'm going to take it all the way up. If I feel like it's curling back over here, I'm taking the whole thing off. I'm loyal to my entire position. The reason I do that is because it builds great habits. It builds bad habits when you're taking partials. Why does it build bad habits? Because simply put, if you're over here taking partials here, then taking partials here, then taking partials here, taking partials here, taking partials here, like, the equity is skewed at this point. Versus if you literally just let it run all the way to the top and just put your stop loss at a certain point. And I only moved my stop loss twice, 2 pips into profit and a third of the way through. All right. That's trade management. What's psychology behind this? Well, just because something looks like it's curling down doesn't mean it is, right? So what prevents me from taking profit is knowing, and this sounds crazy. I know this is going to sound crazy to people, but knowing that I can take it if it pulls back and just stops me out 2 pips in profit. I can handle that. And the thing is, there was a little bit of a 5-minute OB there as well, order block, mitigation block. But that's advanced stuff, right? For the beginners, just know this looked like a reversal. It looked like a reversal, break and retest, and it looked like it was going to come back down. It really did. But what's so funny to me is it never came back. Like, it just, I sold off, and I gave back my 25 pips of profit. Silly me, right? So there's big psychology behind this. We have to trust our trade. We have to have a bias. You know, they say, don't have a bias. Don't, do this or that. You should have a bias. Because if you don't, then you're going to start hedging into the market like I did yesterday. I was like, is it going to go down? Is it going to go up? I don't get it. What's going to happen? Even though I originally set this, I got psyched out of the market. And I'm over here selling the market. Why? Because it looks like it's going to go down. Why? Because there's a bunch of rejection. Why? I don't know. It's just rejecting above a quarter level. And then it pulled down, and I thought it was going to go down. And it just did not do so. Right? So, what are some tips I have? Well, let me show you. Right? Here's some good things, right? And of course, by the way, if you use my stop loss method, where you do 2 pips in profit and then you let it come over here and then you do it like this, the worst case scenario, you're gonna make money. Okay, you're either gonna get stopped out 30 pips in profit or 120 pips in profit. You're gonna hit the TP. So, and funny enough, I tell people, grab your 25 and get out. I mean, if you make 25 pips, you're good. And on a 10-to-1 ratio, okay, if I'm risking 3%, I'm risking 3% to make 30%. So whatever happens, happens. I'm either going to make 25 pips or about a certain amount of percentage. Typically, I like to make about 15% a day. That's a number I can generate. I know people that say that that's too much. I know people that say that's too little. So everybody's different. I know people that only target 60% a month. That's a small amount of percentage. I target about 60% a week. You know what I'm saying? And if you have 15%, remember that every 5 times you make 15%, you're doubling your account. That's the math. That's the math behind it. If it's exponential, 15% 5 times equals 100%. Even though 15 times 5 doesn't equal 100%. I hope that makes sense. So what are some tips I have? Let me show you. Right? First of all, for God's sakes, don't over leverage. Manage your risks. This goes without saying, right? Again, if I have a 10-to-1 ratio, which that was, okay? That other thing was a 10-to-1 ratio. I was risking 12 pips to make like 120, right? So that was a 10-to-1 ratio. If I'm risking 3%, which we should, risk 1 to 3%, rule of thumb, if I'm risking 3%, I was gonna make 30%. Straight up. Right? And even if you take 2 or 3 losses at 3%, it'll go down to like 25%, 22% equity. But you're still up 22% on the day, and I still end up smashing my 15% a day goal, right? So be patient, don't over leverage. Unless you're Q Banks or Ty, these guys, I mean, they'll put up 5%. They'll put up 10%. There's going to be times where the setup is so good, you should probably put up 5 to 10% because it's just too juicy of a setup. So you got to put it up. You got to risk it for the biscuit. Number 2, don't overtrade or revenge trade. For God's sake, if you overtrade, that's basically like you're over leveraging, because you can sit there and manage your risk and overtrade, and it'll be like you over leveraged because you've lost so many trades for trying to revenge trade or overtrade, and you're trying to make your money back that day, and you end up planning trades that you never take, and taking trades that you never plan, and it just gets bad, and you dig yourself into a hole. So set yourself a trade limit. Say, hey, today I'm only gonna trade 1 to 3. I'm only gonna put up 1 to 3 trades, right? Set a limit for yourself. Be honest with yourself. I'm only gonna do 1 to 3, right? And today I did 7, so I broke my own rules, right? So, and this is not just for you guys, this is for me as well. So I gotta adhere to this, right? Number 3, do not get emotional. Emotional intelligence, right? I got super emotional. And I was like, man, what's going on? I was zen at first. Then I just broke all my rules. So it's good to just have a bunch of rules right next to you. Print it out, write it on a notebook if you have to, and sit it right next to you while you're trading. And also fill out a trading journal, right? I was also beating myself up this morning. Damn, I missed an extra 90 pips, and then I was hedging, and don't be so hard on yourself. Look at the chart, look at what you did wrong, and correct your mistakes for the next session. Number 4, take at least 1 hour to analyze a pair before taking the trade. I promise you that if I would have been looking at this trade, if I really, really would have been looking at this, right? If I would have been looking at this like an hour before and not been on Netflix, watching Scarface with my bro, I literally would have been able to catch this like perfectly. Now, don't get me wrong, I still got in all the way down here, but I would have been able to plan it a lot smoother and been more calm about it. Does that make sense? So I actually would have been like, I would have been like, wow, like this does look like, okay, yeah, there's an order block up here, there's an imbalance, which I did, but I hesitated because I wasn't sure, because 5 minutes before I entered the market, I literally just started looking at the chart. I'm planning everything out. Like, no, you have to look an hour before. Be like, okay, it looks like Asian range is coming down. Okay, looks like they're probably gonna trap traders there and then run it up. That was easy. That was an easy strategy, right? Accumulation, manipulation, markup, easy. So that was that. I actually really, really have to pee, so I'll be right back. Wow. That is so crazy how bad I needed to pee. I know a bunch of people saw that. So I definitely, if I was watching this an hour before, I would have been a lot calmer about it, and I would have been, able to do it. Like right now, after I get off this stream, I'm going to analyze the market, and I'm going to see what's going to happen. I don't know what's going to happen just yet. Maybe they'll run down. I don't know. We have to see. I have to wait till 2 o'clock because that's when my strategy starts. Right? Number 5, be patient. Be a sniper, man. Goes back to what I was just saying. Be patient, man. Like, just take an hour, calm down, just look at the chart, be patient, let the trade come to you. Just let it happen. Let it come to you, and then you know what to do. You know how it looks. You have that screen time. You've been able to look at the chart, and you've seen these patterns happen over and over and over and over again. Get in. Don't hesitate. Build up that confidence. Easier said than done. Number 6, never make a decision based on a live candle. Wait for the gosh darn thing to close. I can't tell you how many times I've been induced into a candle that looks just like this. I sell, and some poor bastard just sells the low of the day. Then that's like a 15-minute candle, and it's going down like the whole 14 minutes, and then the last minute, it just shoots up and creates like a wick, and it just becomes it just closes as a bullish pin bar or a pin hammer. Like, I mean, that sucks so much. So wait for the damn candle to close before you make a decision, right? Number 7, I just added this because of today, really, and I've been thinking about this. But have a one in the chamber mentality. When trading stocks, if you have under 25 grand, there's a PDT rule, a pattern day trader rule, stating that you can only make 3 trades per week. In the foreign exchange market, that's not there, but maybe that's a bad thing for some people because you can overtrade, and it gets bad on a small account. You got to have a one in the chamber mentality. Pretend you only have 1 bullet to snipe this one day or this one session. Like, have 3 bullets for 3 sessions, but have 1 bullet per session. Be like, I got to get the best entry this session. What that's going to do is it's going to help your consistency rise. You're going to be much more profitable at the end of the marking period, at the end of the month, and you're just going to just be more consistent, and you're going to be more disciplined because you're going to be sitting on your hands more and just waiting for that A1 quality setup, right? That's what you want. Some extra tips: don't focus on making money, focus on not losing it. Capital preservation, or the triple P, profit protection program, right? You want to build yourself a profit protection program. Be like, okay, if I lose more than 10% today or 5% today, I'll stop trading. If I lose more than a certain amount this week, I'll stop trading for the week. If I lose a certain amount within the month, I'll stop trading for the rest of the month. Set yourself a limit so that you don't blow your account and that you don't overtrade, right? And focus on not losing the money. Manage risk before you look at the reward. Now, you can reverse engineer it and be like, okay, something's going to come up here. But okay, we know it's going to come up here. Technically, I do, look at my reward first. So I'm being a little silly. I'm being a little disingenuous. But just look at your risks too. Just be like, okay, after I know this is going to go up at probably 100 pips, I want a 10-to-1 ratio. So I'm probably going to get 10 pips. Okay, what's the best entry for me to get a 10 pip stop loss and not get stopped out? And then I'll just wait for that entry. I won't chase the market if it's 18 pips away. I'll let it pull back because it'll look like it's pushing up and then it'll shoot down, hit the mitigation block, run up 100 pips. And last but not least, past price action to predict future price movement with proper risk management equals a net income. Past price action to predict future price movement with proper risk management equals a net income. Okay? What does that mean? Well, hey, past price action, okay, there was a gap on the daily. To predict future price movement, okay, that gap on the daily is probably going to get filled. With proper risk management, okay, I'm going to risk 3%, equals a net income, a net profit, right? So that's really what's going to happen. You literally need to stick to something where you have these rules right in front of you, print them out, write them out, and have them right next to you while you are trading. Because if not, you're doing yourself a disservice, right? And then I've got, oh, where's my other stuff? There's something else here. Here we go. Here we go. And here's my strategy. Right? Here's my strategy right here. Right? So TCL, right? Time, candles, level. Right? What time was it? It was 2:15. What candlestick formation happened? Well, it was a 1, 2, 3. They worked the low. They'll work the low. This is not necessarily a creeping trend, but it kind of is. And we get a form of a extended W. We get a 1, 2, 3 peak formation at the low of the previous trading day. We grab the stops of Asian range, and then we run up 120 pips. I mean, you can't make that stuff up. And I've seen that happen so many times that it's crazy. I got shaken out at 25 pips. But putting it into perspective, there's people that still can't grab 25 pips consistently. So I have to count my blessings. I'm complaining that I didn't grab 100, but I'm at a point where I can grab 25 easy every day. I could grab 25 pips. And that's not cockiness. That's me having confidence in the market. I've been looking at charts for damn near 4 years almost at this point, and I've been trading live for 3 years, a little bit over 3 years. So I didn't go live for like 9 months, you know, like seriously, I really wanted to understand what I was doing. And even then I still started getting, you know, not the best results, right? So TCL, and I have it in that order because the most important thing you can do as a trader is look at the clock. There's a lot of algorithms happening. There's a lot of algos, right? A lot of algos. So the most important thing you could do as a trader is look at that clock. That clock is going to tell you everything. 2:15, okay, price is going to move this way. Okay, at 3:30, price is going to move this way. Okay, at 4:30, price is going to move this way. They might do a manipulation at 2:15, and I already know to take profit by 10 a.m., 10 to 11 a.m. Eastern time. I already know this because I've seen it so many times. But I know in between that, price is not going to move like this, right? Oh, how we all would wish that price action could move just like that. But it just won't. So they're going to go like this. They're going to kind of make it seem like it's going to reverse and then kind of go like this. They kind of go like this. Give us a peak, make people chase it, run down. Make you think it's going to reverse again and then shoot back up. Like, that's how it moved. You know what I'm saying? So I just like to stick to the algorithm. I like to stick to, okay, what time is it? It's probably 2:15. Okay, what time is it? Okay, this and that. Okay, 8 p.m. to 10 p.m. Eastern. I know Sid Toy or Sydney Tokyo session is going to move a certain way. Okay, like just whatever session you feel comfortable with. Write it down. Monitor currency pair. Stick to 2, 3 maximum, but I say 2 currency pairs that you can watch every day, watch each session, or, you know, come back at the end of the day before you go to bed and look at every session for like a month straight, 2-3 months straight, like I did with GBP USD. And what you'll find is, guys, these pairs move the same way every single day in different ways. These pairs move the same way every single day in different ways. Straight up. So if you know they're going to move that way, what is going to happen to your confidence? Right? You start to almost get into some trades. Like I got into that trade after getting stopped out twice. I got into it and I rode it up 25 pips, you know, and I think I was up because I did a 0.02, and then I got into a 0.05. Once I saw the 3 taps and 215, 230, I was like, nah, this is going up. And I grabbed my 25 pips, made back my losses, and then I tried to sell into the market and lost everything because I got psyched out. I thought the market was going to roll over, and it shot right up. So trust your trade. Remember these psychological steps. Have them next to you while you're trading. Remember the extra tips. Remember TCL. And please, for God's sake, be easy with yourself. You know what I'm saying? Be very, very calm with yourself. Don't get so mad that, you know, you didn't, like, you left 90 pips on the table. You know, just take a step back and be like, man, what can I do differently tomorrow? Oh, maybe I can take Joel's thing into account where he goes, okay, once I get a third of the trend, I'll trail my stop 2 pips into profit. The worst thing that's going to happen at this point is I'm going to make money. And if there's slippage, I'm going to get stopped out, break even, or negative 1 pip. You know, but it's fine. You know what I'm saying? You were already risking 10 pips. So what's 1 pip now? Right? And then once it goes to 2/3, trail it 1/3 of that. If that makes any sense. And never move it again. Worst case scenario, it's either going to hit 120 pips or it's going to curl into 30 or whatever the math would be. You know what I'm saying? So just keep it simple, traders. For God's sake, keep it simple. Don't be so hard on yourself. And what's one last little thing I could do? You know, and they say there is no best time frame. And you know, I mean, yeah, you could say that, but you know, the 15-minute chart is the best chart. No, I'm sorry, I can't say that. I'm sorry. There is no best time frame. The 15-minute chart is the best time frame. The 15-minute chart is the best time frame simply because, like, once you identify the trend on the daily, 4 hour and 1 hour and 30-minute and 5-minute, 1 hour, 1 minute, like the 15-minute has just enough information to where it shows you exactly what the market's about to do, but just not enough to tell you, or it has just enough to show you exactly what's happening, but just not enough to show you what's happening, right? If that makes any sense. So it looks like a lot of noise, but when you go back, you know, it's not too much. It's not too much. Like the 5-minute. That's what I'm trying to say. You know, the 5-minute, you can see the 1, 2, 3, and you can see the RSI, you know, convergence, divergence, excuse me. But on the 15-minute chart, it's just kind of cumulative. The 30-minute, you can kind of spot stuff, but it's not the same. It's not like the 15-minute. And you can find the same sort of trends, but the 15-minute chart, I just stick to that. And keep it simple, traders. You got your high, you got your low of the day. Keep it simple. You got your order blocks mapped out. You got your quarter levels, double zeros, 25, 50, 75 double zeros, 25, 50, 75 double zeros. I'll be seeing people put zones like 39, 1, 3, 7, 6, 5, 3. Like, bro, just keep it simple. The banks don't give a damn about that stuff. Okay, they also don't give a damn about your currency strength meter either. I'm sorry, I'm gonna get flack for that. I'm sorry. They don't give a damn about your currency strength meter. They don't care. Okay, the banks just want to push price to wherever there's liquidity, right? And they want their order books. If you ever look at their order books, they only want to get to double zeros, 75, 50, 25. They only want even numbers, right? So keep it simple, traders. High and low of the day of the previous trading day. Put out your order blocks / imbalances and put out your quarter levels and stick to TCL. What time is it? What candlestick formation is forming? And what level are we at? Okay. God bless you guys. Anybody that joined, anybody that's watching this after it has been posted, hopefully this audio captured this time, because man, it would suck if I have to do this all over again. Boy, what I tell you. And yeah, guys, listen, man, thanks for watching. I appreciate you guys so much. Stay tuned for the next one. Peace.